Everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I am a professional trader and a programmer as well. If you guys are new, what I'm doing here, I'm looking at some good opportunities that may happen next days, as well as I explain some aspects of technical analysis and psychology of trading. And in today's video, I will explain you the tips and secrets of trading the bad advanced formations. And I will show you the 4 trades that I'm looking at. Okay guys, and before we start, we need to prepare ourselves. Go to my website, www.ps-software.net, click on that Learn the Patterns tab, and you will find all the patterns that I trade absolutely for free. The information is free. We will talk about the bad advanced formation, so we need to click on that picture to have the details. This is the bad advanced formation. Okay, let's go back. So the first thing that you need to do, you need to know how to read the price chart, and the best way to do that is to understand that markets are moving ups and downs. So they move in this manner. They move in swings, they move in waves, or whatever. So you need to unite some major reversal points this way, like this. Continue, this, and then you should look at the structure of those lines that you have drawn, and if it looks similar to letter M or to letter W, like this, then you have a potential pattern. Like in this case, it looks similar to letter W. In this case, we have a potential bearish pattern. We are going to sell. Okay, so now let's go into details. To draw that pattern, you need to take that seedy pattern tool and draw it this way. X to A to B, B to C, and the D point completion place somewhere here. We'll talk about it a bit later. Okay, so this number shows you the ratio of A to B leg if compared to X to A. So you should understand this. This is a retracement. AB is a retracement to XA. So the ratio shows that the AB leg is 0.54% of XA. Okay, let's go to my website to see if we have the B point criteria met. The B point criteria is our criteria number 1. Market forms the B point completion by fulfilling at least the 50%. We have 54. Okay, let's go to some notes. AB remains valid if we have 50%, but we do not touch 618. Obviously, we don't touch 618. If we did touch 618, the number here would be above 0.618. Okay, so criteria number 1 is met. Let's go to criteria number 2. Criteria number 2 is the C point. And the C point criteria says that the completion point starts from 382. And it remains valid if the price stays within the 382 and 886. But there are some variations. It should stay from 382 and A. I trade that second variation. This is my favorite variation. So it should stay somewhere between the 382 and A. Obviously, we do not touch A, and obviously 0.66 is more than 0.382. So you see that how easily they are calculated with that XABCD drawing tool. Okay, once we have those 2 criteria, then we look at the pattern completion. Where the pattern completion takes place? It takes place at 886 retracement of XA. So it shows this 886. Look at that number, 889, 885. Let it be 885. Just a bit approximate. Okay, to have the precise numbers, stretch your fibs like this, fib retracement from X to A, I have a template already, but entry, and this is the precise number with quotes inside of that. So this is the 886, and in brackets we have a quote. Okay, I also enabled the 113 for stop loss. Let's go to the trade execution rules, how we should trade them. We should place a limit order at the completion point. So as soon as price touches this, we should sell it. Let me go to targets first, and then I will explain those warning signs. Targets are the 382 and 61A. So you should stretch your Fibonacci from A to D. Look at those letters. This is A, this is D, and enable 382 and 61A. I already have a template, 382 and 61A. So these are the targets. And the stop loss is 113. If you look at that, but stop placement, either 113, 1 ATI above X, maybe 10 pips above X, it doesn't really matter. So 113 is pretty good. It becomes larger if XA becomes larger. If it becomes smaller, if XA becomes small. So it is dynamic. I love that dynamic stop loss. Okay, and let's go back to warning signs. The warning sign. If you have gaps or expansion bars within the seedy leg, this means that you need to look at some additional confirmation. Maybe you should look at the double top on a lower time frame, 5 minute maybe. Maybe you should look at the RSI divergence when price is installing the higher highs and RSI is installing the lower highs. This is called a divergence. Or maybe you should look at that stochastic being overbought, or MACD crossing to the downside, whatever is your confirmation. I am using simply price action. I'm not using those indicators that calculating some derivative from the price. I'm using the price itself. Okay, and now I will show you how you should decide if the pattern is going to work or not. By itself, if you trade those patterns, regardless of the price action within the seedy leg, they are about 55% accurate, 55 to 58, depending on the pair. Let me go to my Excel spreadsheet. Pound yen, but patterns. Pound yen, but patterns. Large patterns, bats 57 to 60 if they are large, and 58 to 60 if they are medium. So I have pretty much backtesting pairs here. So they aren't just taken from some books. This is the work that I've done myself. Okay, let's go back. 57-60% accurate. But if you look at the price action, you can increase that number to 70 to 75, and that's why you will have those drawdowns much less. Okay, what are the large expansion bars? They are bars that like this. They are larger than all the previous bars, than average bars. This is the large expansion bar to the downside. Look at this, large expansion bar to the upside. Yes, so if you have something like this within the seedy leg, then you should probably wait for a confirmation of some, maybe you should skip that pattern at all. Okay, if this pattern, this bar that is rising right now, yes, if this bar goes higher, higher and higher, higher and higher and completes the pattern, it will be a large expansion bar if compared to previous. Okay, so now let me show you the ideal seedy leg, how it should look like. And it should look like this way. I will draw a number of candles. This is candle number 1. Let's say this is candle number 2. This is the seedy leg. And it obeys the principle of candlestick trading. Japanese think that the body of the candle is the most important part. It's not only shows the actual price, the high and low and whatever, but it also shows the strength of the movement. So if the body becomes smaller and smaller and smaller like this, yes, this means that the uptrend is losing its steam. Yes, so if we go back and you see that movement to the upside, then a retracement, then again movement to the upside, then a retracement, and now we have a movement to the upside. If you have that one candle being let's say large or medium size, then the next candle being smaller and smaller and smaller and smaller, and they turn into dojo spinning tops somewhere at this level, this is a very good sign. This is a very good confirmation that the pattern is gonna work. Okay, and the second thing you should pay attention are the shadows, especially the upper shadow. So let me draw the upper shadow, control and drag it like this. If the shadows become larger and larger and larger, so this is a very, very good sign. So this increases the probability. So the body becomes smaller and smaller and smaller, and the shadows become larger and larger and larger. This increases the probability of the pattern work exactly at that level. So pay attention to price action within the seedy leg. This is my my tip for you. So you don't have those unnecessary stops that could be avoided. Okay, that's it about the warning signs. Let's go to the trade management rules. There are two tips on trade management. Sometimes price doesn't reverse exactly at 886, but it goes a bit higher, exceeding the D point, the calculated D point. It goes a bit higher, and only then it goes to reverse. So you need to restretch your Fibonacci this way. This way your targets become larger, higher, sorry, they don't become larger, they become smaller, but they move a bit higher. This is called target adjustment. So from here they were small, lower, 47.12.9 to here they become 47.22.9, 12 to 22, to 10 pips higher. Okay, so this is that what is called target adjustment. And the second trade management rule is about that first target. When you hit the first target, you should close your half of your position and move the stop of the rest to break even. So then you are waiting for your second half of your position either to hit that 618 or go back to hit the break even. So this is your trade management. I know, guys, many of you just hear that for the first time, and it may be an eye-opening experience for you. You first need to look at the C to D price section, then you need to do some trade management, but you thought that advanced pattern trading is the set and forget method. It's not. You need to do target adjustment, and you need to do the management. This means you should close the half of your position, move your break, stop loss to break even, and blah blah blah. Okay, let's go to my MetaTrader 4 platform and look at the trades that I'm looking at. All those trades are drawn automatically with my automatic HPS scanner indicators. Sorry, it is here. Automatic HPS. Close it. What is this? Trade panel, one-click trade panel, disabled. Okay, the bad pattern on euro-dollar 15 minute, it looks this way. The entry is 14.32, the stop loss is 14.47. If we go to the upside, then the entry will be triggered, and of course we should look at the price action within the C to D lag, and we should avoid those large candles, stay away from them. What are the targets? Let me stretch from A to D, and here's the number. 14.12 is the first target and 13.99 is the second target. I would move my second target to 14 sharp, 14 even, because this is the psychological number and it may not exceed that even 1 pip. So I would take the profit a bit earlier, 1 pip. So it would be 14 even. If you guys don't know how to have those prices, if you only have the ratios 50, 618, 786, but you don't know how to have those prices, I will reveal a secret for you. Just right click on your FIBA, go to FIBA properties, go to FIBA levels, and here in description of that you should code it bracket, percent, dollar, and another bracket, and you will have the prices in that description. 50% and then the price, then 618% and then the price. It is very convenient, so you don't need to use that cross, always calculate the price of that. Okay, my second trade that I'm looking at is Aussie Canadian. Automatic scanner doesn't find that, but it can be found by my manual scanner. I just show the swings that I'm looking at. This is the first swing, this is the second swing. So if criteria are met, then the pattern is drawn. So Aussie Canadian bad pattern, the entry is 98.14, the stop loss is 98.27, target 1 is 97.97, target 2 is 97.87. Let's go next to pound yen. This is the trade that I was just explaining to you. This one just was showing to you. So it is drawn this way, but typically when we have that situation, when we have the pattern, and just few sessions ago we had the higher high, so we'd better draw the higher high. We'd better start drawing with the higher high. That's why it is very useful to use a manual HPS tool that would adjust our drawing. So this is the higher entry, this is the higher stop because of larger bad pattern. You could do it aggressively, trade the first bad pattern, then trade the second bad pattern. So actually this is all about that box range, like this, you see. So the movement can start at the lowest range of the box, or it can go to the highest range of that box. So you never know which one will work. If you are very aggressive, you can trade the first. If it fails, you can trade the second. Up to you. Okay, what is the entry? 47.8 is your entry. Stop loss is 75.9. Take profit 1 is 0.8, and take profit 2 146.84. 15 pips below 147. So this is your target number 2. Okay, let's go to Euro Aussie. Here's the very nice situation that I'd like to explain to you. So we have a bad pattern and we have a smaller godly pattern. Look at that pattern completion. So the completion is very close to X point. If we measure, it is 0.8 pips, less than 1 pip, almost the same as that X point. I didn't enter that godly. First, there were 2 reasons. Because of those large candles, if compared to previous, these candles were large. Second, because the godly is very small. The stop loss of that Gartley is 3 pips. So whatever movement to whatever side will hit the stop loss. So this is a very small pattern. And the third is because of that bad pattern bum trade. What is the bad pattern bum? The bad pattern bum theory is explained in Scott Carney's book Harmonic Trading Volume 2, I suppose. So let's have a bad pattern. It is something like this. B point should be a bit lower. Okay, so if the CTD movement goes this way and breaks the B point like this, it breaks the B point, there is a higher probability for a movement to complete the pattern. So, and it is exactly what happens here. If it crosses the B point of that bad pattern, there is a higher probability of price to move lower. So we have that probability to move lower. That's why I would stay away from those Gartley patterns. We've broken to the downside, expecting that Gartley stop and reverse and work is a bit nonsense. Okay, well, that's it about the trades that I'm looking at. Let me tile the windows like this. So the first one is Euro USD, the second one is Aussie CAD, the third one is Pound Yen, and number 4 is Euro Aussie. They are all bad advanced formations. Well guys, hope you like that video. Oh, I didn't tell the targets on that trade. Let me stretch that. Okay, the entry is 49.68, the stop loss is 49.57, target 1 is 49.83 and target 2 is 49.92. Okay, guys, hope you like this video, hope you find it useful. If so, please share this video on social media, give me your thumbs ups. If you don't want to miss my next videos, then just subscribe. Until then, good luck, good trading. Hope to see you soon.